So next standard what we have is borrowing cost. Borrowing cost. Now, when I say borrowing cost, what and all it includes and what is the treatment? Let's understand. Borrowing cost. What and all it includes? Simple words. Cost of borrowing. It includes all kinds of interests paid or accrued on loans. Even then charges, let's say transaction charges, loan processing charges, or transaction charges. Other amortizations also can be considered. Amortizations. Like what? Like discount on issue of debentures, underwriting, discount on debentures, underwriting commission. All those things also can be considered as borrowing cost. Okay. So what is the treatment? We can capitalize subject to some conditions. One more, even if it is foreign exchange, to an extent, even the foreign exchange to an extent can be called as borrowing cost. I'll explain it later. Foreign exchange to an extent is called as uh, borrowing cost. I'll discuss it in a moment from now. You capitalize, or in some cases you charge off. Okay. When will you capitalize? You capitalize when the amount is attributable to either acquisition or construction. Amount is attributable to acquisition or construction. You acquire an asset or you construct an asset. And more importantly, it has to be a qualifying asset. It has to be a qualifying asset. What is qualifying asset? And remember the word and. Qualifying asset means it takes substantial period of time to get ready for use. Substantial period. To get ready for use. For intended use and purpose. Substantial time. What is substantial? Normally we take 12 months, though not compulsory. Normally it is 12 months. You see, even in your life, once you become a CA, you are called as qualified. Why it's called as qualified? Because do you think being a CA or to become a CA, it takes substantial assets? Definitely substantial asset, substantial time, right? To become a CA, it requires substantial time of your lifetime. So once you become a CA, you're called as qualified. Asset also, if it takes substantial time, you are constructing a building, you are assembling a machinery, you are laying down some assembly line, various things, production line, pipelines. When it takes a lot of time to construct an house or to construct a building or to construct an asset in general, so before the asset is ready for use, you have to spend lot of expenses. One among them is loan also necessary, essential, because it takes long period of time. So normally interest is not part of the asset. Normally it's always transferred to P&L. Even in costing, cost of the product will never include interest. AS2 also will never include interest. But if it is a qualifying asset, it takes substantial period of time. We make an exception and we capitalize. We capitalize. Other cases like relating to working capital, asset not a capital asset, after put to use, all those things will be charged off. Okay. Now, what type of borrowing we will have? We will have two types of borrowing. One is called as specific borrowing, other called as general borrowing. Specific borrowing means loan taken specifically for the purpose of this asset, where we take specific assets, specific rate of interest. General borrowing means 3-4 loan we take but use it for this business and other business also. So here we follow average rate, weighted average rate. Weighted average rate. Then uh, we'll do problem also on this kind, no problem. Other cases such as relating to working capital, not a qualifying asset. If asset is not qualifying assets, then after asset is ready for use, even though qualifying asset, but after the asset is ready for intended use, after asset is ready for intended use. So capitalization will happen only up to the date of transfer. So when the capitalization will begin, when the capitalization will cessation. So beginning, when expense is incurred, asset is in construction. When expense incurred and interest cost also accrued, interest cost is paid. Till when? Cessation, when the asset is ready for use. When the asset ready for use. And in between, sometimes you may suspend also, where you think that the active development is interrupted. Corona 3 years, 3 months period, 4 months, no development. You have to suspend capitalization of interest. If it is a temporary delay, that's fine. Like you are doing some construction activity, some rocky surface comes. So you have to clear that. That is necessity. So necessity, temporary delay, we avoid. That we don't do. That we continue capitalization because they are necessary. But for the corona thing and all is not necessary. They are abnormal in nature. So capitalization is stopped. Capitalization is stopped. So in that case, we have to suspend for the time being. Then when the activities resume, interest capitalization also can begin. And in case of specific borrowing, before the money is utilized, you might have put in some fixed deposit and all. The income would have been earned. That income also should not be transferred to P&L account. It should be subtracted from the borrowing cost while doing capitalization. So interest cost is added and the interest income is subtracted. Before we discuss the foreign exchange element, any doubt in this manner? Any doubt in this case? Are you clear? Any doubts? Are you clear? Is my voice audible? I'm not getting any response. Any response, please? Okay, if I don't get any response, there's no point of me being coming to live. I better record and upload. That's also comfortable. Anyway, I'll go further. Okay. Next we have is connection with foreign exchange. Foreign exchange difference and borrowing cost. What is the connection with this? You see, if you take a loan in India, it may be around, let's say, 12% rate of interest. But if you take a loan in US, it is only about 4%. So you save 8% interest. You save 8% interest by taking the loan in foreign currency. So go to a bank, say I want loan in foreign currency terms. The rate of interest is cheaper. You take the loan USD, convert to rupees, make usage in your business, and go and sell it, and go and then repay it in dollars. You save 8%. But one important aspect what you have to understand is this concept you are going to learn in CA final level. Exchange rate will increase. Is also called as interest rate parity theorem, purchasing power parity theorem. Between the two countries, you might have the exchange rate, but the ability to purchase should be same. That's what the theorem says. You learn more in CA final level, but I'll give you a brief idea about it. What really happens in exchange rate? A currency which is having a lower interest rate will demand a premium. Like in this example, USD. Because of their lower exchange rate, USD is more valuable than rupees. They become more valuable, so exchange rate will increase. That is a currency with lower rate will will trade at premium, will trade at premium, will trade premium. So this exchange rate increase, you have to pay more, right? Like when you borrow, let's say $1,000 at 70 rupees, now you have to pay 73 rupees. So 3 rupee extra amount what you're paying. Why this exchange loss is coming? Only because you're taking the loan in foreign currency terms. Had you taken the loan in rupee term, this loss would not have arisen. So what the standard says, this foreign exchange loss, don't call it as foreign exchange loss. It is in the nature of interest cost. Substance over form. On the form, it looks like it is foreign currency exchange loss. But that foreign currency, why is that loan is coming? Only because you are having the foreign currency borrowing. Had you taken the loan in Indian currency terms, you would not have had it. So they say whatever the savings you do, for example, if the saving cost happens to be 10,000 rupees and exchange loss is 11,000 rupees, out of 11,000, 10,000 you call it as borrowing cost. Only excess amount you treat it as foreign exchange difference. So what a summary is going to be there? So for first you calculate uh, interest payable, okay, whatever, interest on foreign currency loan, interest on foreign currency loan, this is borrowing cost definitely. Then interest on the foreign exchange difference, foreign exchange difference on reassessment of loan, on reassessment of foreign currency loan, on reassessment of loan, change in exchange rate on due to principal amount, this difference in principal liability, difference in principal liability, difference in principal liability. This we divide this into two parts. This some portion is reported as borrowing cost. How much? Some portion reported as borrowing cost. How much? Interest on loan, interest on foreign currency loan, this amount, and notional interest on rupee loan, notional interest on rupee loan. That is, had you taken the loan in rupee terms, how much amount you would have paid? That much amount. How much amount you would have paid? That is difference. See, difference between A and B. Difference between two above. Difference between A and B is reported as borrowing cost. Any excess loss, any excess loss will become reported as exchange gain, exchange loss. So this borrowing cost is AS 16. This difference what you got is AS 16. This reported as exchange loss is AS 11. Now, sir, will it be capitalized? Will these amount be capitalized? This will be capitalized if it is a qualifying asset. Capitalized if qualifying assets. For this also same, capitalized if qualifying asset. But AS11 not a qualifying asset. Paragraph 46A revision. If option was used, remember that option, paragraph 46A, where entity has a choice of transferring it to balance sheet instead of transferring it to P&L account. If they've exercised that option, then you capitalize. Otherwise, don't worry about the capitalization piece. I hope you got the clarity on the foreign exchange loss. So to put it in simple words, when you take the loan in foreign currency terms, You get the interest at a cheaper rate, so you save interest. On one hand you save interest, on the other hand you will have foreign exchange loss. This foreign exchange loss, don't call it as loss to the extent of this interest cost which is saved, because in reality you are not saved. In reality the interest which you would have paid, now you are paying in the form of foreign exchange loss. So in the substance it is a foreign exchange, in the substance it is a borrowing cost. Therefore, the borrowing cost saved versus the exchange difference loss, to the extent of borrowing cost difference saving, you report it as borrowing cost. Excess exchange loss, you call it as exchange loss as per AS11. So, foreign exchange difference to an extent of savings in the borrowing cost. You think it is saving, it is not saving, it is shaving. It's paid out in foreign exchange difference. So foreign exchange difference in the form is foreign exchange difference. To the extent of savings, you report it as borrowing cost. Balance amount, excess if any, you report it as the exchange difference as per AS11. So AS16 will have two elements. One, interest cost paid, another is notional interest cost difference. Both of them put together will be accounted as borrowing cost. Hope you got the clarity. Any doubts before we go further? Okay, I'll go further.